We're on express elevator to hell. Going down.
2, 1, mark.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, we caught the top. We traded the drop. We set those trades up over weeks on this channel. We talked about the Eclipse crash cycle, made videos on this channel, the solar maximum, and now we are in the retracement side of either going from a wave 3 to wave 4 in a fractal wave set, up to a 5 for a blow off top, or a lower high. So in this video, by popular request, I'm going to look at the S&P, the NASDAQ, the Bitcoin, based on fractals, based on Fibonacci, the methodology that I trade, and give you the targets and timing for both the blow off top scenario, or if the blow off tops are in, then the lower high scenario and the time associated with that. And guys, if you want to trade these moves, if you want to ask me questions about these patterns, I highly suggest you take advantage of our free month offer. Message Lee in the Telegram. We have almost 12,000 people on the Discord. As soon as our website launches, that offer will be gone. Our education, our live streams, our indicators, the community, everything is there. It's free for a month. All that information is in the video description, brought to you and paid for by our two fantastic sponsors, SimpleFX and BingX. You can use their links if you want to trade these Ponzi markets, get our bonuses, be in our tournaments. Great place to trade if you want to trade. Now that's the housekeeping. Let's get into the cycle. We're going to start off on the S&P. These are the macro movements, okay? We're going to zoom in on the daily and the retracement cycle, but these are the macro movements in the market right now. So key points. Fractal wave theory. This is what we're looking at. 1, 2, 3, 4, 5 for a blow off top ending up here. Now, what we're looking at based on this is we're looking for the low to come in June 28th. Remember, late June, early July is when we have the timing for this low based on what? Based on sequencing, based on the previous fractal. This is how we're looking at this. The targets that I have identified are 48.21, 4,700, 45.85. 4,700 being the most likely candidate. I'll show you why when we zoom into the retracement cycle, but this is what I'm looking at, this 4,700. In other words, where we are now, we got the trade up here. Where we are now, we're looking for price to wave up, wave down, wave up, wave down, come down to 4,700 late June, early July. And then if we're going into a blow off top, proceed to move up. When do we have that blow off top sequenced out to? November 18th, just after the presidential election. Does it have to be that way? No. This is part of trading with market geometry, and something to learn about and understand about is market symmetry. So when we look at this vis-a-vis Fibonacci, I'll break this down for you a couple different ways. Let's start off on wave 3, fib retracement, pull it down to 2. We can see our 1618 would take us up to that wave 5. You see it right up here, 6,082. I have a lower level target identified as well as 5835. There's a reason for that. This is a forecast. When you're dealing with fractals, you need to see where the targets hit so you can get accurate harmonic expansion. Remember, this is all math. Right? So this is math. The rules based on how I trade are mathematics. It's basically probability, game theory of what you're looking at and how it extends. We already know Fibonacci has been playing out in harmonic proportions in the S&P. How do we know that? If we take a fib retracement from wave 1, come down to our origin point, look where the 1618 hit, 53.34. I got you within $1 of this cycle top, and you knew about it for weeks leading up to this top. I personally traded and posted a trade above 5,300 for the S&P for this drop, okay? So you had this great move down in the S&P coming down to 49.63 from 53.34, okay? Right now, you're trying to put in the bottom for the next wave. So we know this harmonic expansion the S&P is tracking to beautifully. Now, if you understand symmetry, market symmetry, Gartley wrote about this, Gann wrote about this, Gann was the originator of this. When you understand market symmetry, we can pull a wave 3, Back down to wave 2. Again, 1618 would take you to 6,082. If we look at this from a trend-based fib, for balance, our harmonic balance point, wave 2 to wave 3, down to 4. And again, we don't know which level it's going to hit. So we're going to use that 4,700 level. You can see the one fib, your 100% move. This would be your AB equals CD in an ABCD pattern, or your A equals C in a 3-wave move. So we know we have this kill box area that will form up here in this range. Okay, so this is the range we're looking at, and that goes from 5835 to 6082 in a blow off top scenario. And again, the timing on this, we had the completion of a harmonic cycle from 2 to 3, 144 days, essentially 35 bars, 153 days, 34 being a Fibonacci sequence number, either on bars or on days, 144 being the completion of a harmonic cycle. You had that play out, not the exact day, within a few days. Again, this is all part of trading. And then you had this excellent drop that occurred after the time period expired for this to move down. Almost a 7% move, guys. 370 points in a single trade, a 7% move. This is huge in the equity space. The crypto people, you'll get that eventually. These are big moves in equities, big moves. The Dow wiped out every single gain for the year. You made nothing in 2024 with the sell-off in the Dow. You made nothing in the NASDAQ, talking about an index perspective. In 2024, it wiped out all the gains back down to December. Okay, the S&P held up a little bit better. You came down almost to your December highs, which are only slightly higher than you or lower than you are now, within basically 100, 150 points of where you are now, wiping out the gains for the year. So let's go ahead and move forward. Here's the lower high scenario. Again, I'm not going to break it down the same way on every single chart because you already understand the methodology. If you watch this channel, you've seen me build these charts, okay? So when we're looking at this, again, fractal waves, 1, 2, 3, 4, 5, same exact turning points here in the marketplace. If you're looking for the wave 4 bottom, 4,700, and you're looking at that in late June, early July, if we come up for the lower high, the two targets I identified are 50, 50, and 52.25 right in here. This lines up with some key Fibonacci's. This also lines up in some fractal patterns as well. But let me just show you the Fibonacci here. From wave 3, if we come down to 4,700, your 786 is right there at 5,200. And again, we don't know exactly where this is going to go because we don't have candles. Hence, it's a forecast. If you come down deeper, the targets slightly change. So we'll know more and can update these forecasts once we have candles. Once we have the candles come down, form their final bottom, and then either come back up for a lower high or come back up for that blow off top. The sequence ends the same because again, we're using the AB equals CD methodology, market symmetry, or A equals C. So still looking at November 18th in that range. Could things happen, guys? Could a war expand? Could another plague beset upon us? Of course it could. But as the fractals stand in the market, as the bar count stand in the market, as the symmetry stands in the market, this is my forecast for moving to the downside, then moving back to the upside, whether for a lower high or a higher high for a blow off top. Let's zoom in on the retracements. This is what I posted on X. Looking at this, let's go ahead and go over some key factors. We know tomorrow is the change of a lunar cycle, the pink moon. Again, looking for a bottom. We have market symmetry forming right now in the marketplace. Let's just look at our sell-off in the previous July high, right? Coming down to your first wave 1, right? Your wave 1, 16 bars, 22 days. Again, here's our high, April 1st, April Fools, perhaps for the bulls that were long here. And then coming down to where we are now on this bar, 15 bars, 21 days, 16 bars, 22, 15 bars, 21. And of course, the lunar cycle change is tomorrow as well. Again, looking for this bottom to be put in, our wave back to the upside. I base this retracement on this previous fractal. Notice 5-wave harmonic to the downside, put in your base, and then your 144 bar, 144 day upside, okay? So we're looking for this upside at 5,200 for the wave 2 top, coming back down to 48.21. Again, that's not the final bottom. That's your wave 3. Wave 4 bounce back up 50.50. Wave 5 coming back to 4,700. Be aware, like I said, because I know what's going to happen. Some people won't watch this video. If these targets slightly change, they'll say, oh, you're moving the goalpost. Yes, I am if I need to, because we don't have candles. We have no candles for the bottom yet. For certain, we have no candles for the top, no candles for the bottom. These, again, are projections based off fractals and based off Fibonacci. Now, why am I keen on this 4,700? Well, first of all, let's look at the measurement here from our July high down to our 5-wave low here, 65 bars, 92 days. Notice the complete cycle here, 64 bars, 92 days for this retracement again, right? And again, this would put our bottom, whoops, let me go ahead and move this back. This would put our bottom, move this over, July, late June, early July, July 2nd here on the S&P, okay? So this would put our bottom out here on the day count. And when I'm looking at this, again, 11% drop. Let's move this over here. Let's get a measurement down to 4,700. That comes in at 11.90, so 12% versus 11%. Again, market symmetry in the drop. But from a algorithmic standpoint, you have to understand what dumb money, big dumb money and small dumb money is looking at. What are they looking at? They're going to be looking at the 200. I've already heard it on Bloomberg this morning. The people are like, well, we could retrace down to the 200. It's a possibility, but the 200, I mean, we're buyers at that level. This is a strong economy. This is a strong market. This is a secular bull. And the researchers, I literally heard this is why I'm saying this verbatim this morning. The researchers at our firm are saying this could be a 10 or 15-year secular bull market. That was this morning on Bloomberg. 15-year bull market incoming, guys. That's what happens when you don't understand market cycles or historical norms. But look at your 200. So what's going to happen as this bounces down, comes back up, the 200 is going to start flattening, easing up. And as the market starts selling off, the 200 is going to start flattening out. This is going to be an area of interesting support. You're just at 4,700 right now. And again, coming down to this 4,700 or very close to this 4,700 is going to give you market symmetry of the previous retracement and give you a big potential bounce with dumb money buying at the 200. And that's how we get our next wave up, guys. Our wave up for a lower high, if you think the blow off top is in, or our wave up for the blow off top. Okay. It's going to happen in this range. So this is going to be keen here in the marketplace. We want to watch this retracement where we're at now, the bounce up to wave 2. Again, we have this exact same drop. We sold off deeper, 6.14% on that first retracement. And on this one, we came all the way down to 6.94. Slightly deeper retracement, the same bar count as it stands right now. If the lunar change tomorrow for the next lunar cycle, looking for that wave up. Guys, we got big market movers this week. We have PCE, which is another inflation read. We have GDP. But, you know, again, when you understand cycles, I saw a couple of YouTube thumbs that were talking about NVIDIA, that were talking about the S&P, saying flash crash. Nobody could have predicted it. Well, I mean, we set it up for weeks on this channel. Did we know that something would happen in the Middle East, right? Am I a CIA operative? Did I know something was going to happen? Or was it the timing, the completion of a harmonic cycle and understanding the cardinal points and the pivot points in the marketplace that set up these trades? I tend to think it's the latter. It's all about the timing and understanding cycles in the marketplace. If we look at ES right now, S&P on the daily, below the 50, as you guys know, there's your 200. Your December highs, which you did not come down to, are down here at 4,800, 4840. As you can see, the S&P trying to put in a base here, right? So the NASDAQ came down, wiped out all the gains for the year. The Dow wiped out all the gains for the year. So guys, when you're looking at it on a daily chart perspective, you're just looking at this waving back up, coming back up to resistance, and again, rolling back over, and then completing the exact same fractal retracement that we did over here. So that wave back up, 5,200. Let's look at this on the daily chart so you can see this. If this is the low, which we don't know for certain yet, but let's pretend that it is. If this is a low, that 5,200 is the 618. Also, It's the 618. It's also a fractal, a structural region you want to watch, as you can see here. I mean, it lines up right on top of the 618, but this would be retesting that structure, okay? So you got to come back up, get above the 50, come to the 618 or 786, one of these two levels, and turn down for that next wave down, going back down into this fractal retracement pattern. That would be your 2 wave up here, coming down into your 3 wave, okay? These are tradable moves in the market. Understand, the trend has turned. You're below the 50, you're on the daily, the trend has turned, there's more downside coming in, that is my belief, and you're either going to bounce off the 200 or find support slightly deeper down, but I believe you're going to play out these retracement cycles. So that's where we stand right now. Let's jump over to the NASDAQ. NASDAQ, again, we're going to look at the higher high situation first. Fractal wave theory, we have the fractals moving up, 1, 2, 3, 4, 5. Again, we have the total solar eclipse crash cycle. We have come down here. Where we're at now, guys, looking at this, couple of things to look at. When you look at this pattern, understand symmetry in the market. Charles Dow wrote about this. W.D. Gann wrote about this. The 100% expansion, the natural doubling and halving in the market. Halving meaning a 50% retracement, right? The natural doubling, 100%. Takes you up to 21,000 here on the NASDAQ. So when we're looking at the NASDAQ, where it can come down to, the 2 targets I identified are 16,786, 15,885. Right now, the NASDAQ came down. Let's look at this from a fractal perspective. The NASDAQ came down and found support right on top of your fractal high from December, wiping out all of the gains for 2024. You're trying to hold this area. And again, when you look at this from the macro zoomed out view, just like the S&P, we're going to zoom into the retracement cycle, but you're just making your retracement down to your lows. Okay. That's what you're looking at here. We look at this from a trend-based fib perspective. If we go wave 1 to wave 2, up to wave 3, you can see the 16,786 is my first target. That's where we have a harmonic balance point to come down to. The deeper level retracement, which is where I think we're going to end up, is 15,885 for your wave 4. And then coming up to wave 5, we have 20,990 and 21,532. Why 21,532? Well, let's pull our fib again from 3 down to 2. That is the 1618. That is harmonic expansion, 21,532. 100% completion of the move takes you up to 20,990. Okay, so those are the 2 upside targets we're looking at. Now, if we go ahead and move forward, looking at our lower high scenario, even though one of these targets is a higher high slightly, okay, it's a slight higher high, but our lower high target is 18,104, basically retesting the structure, okay? Also on Fibonacci, depending where we retrace to, if we pull a fib from 3 down to 4, and if we look at this here on the time, but that is your 786, your wave 5, 786, 18,104. Again, this would change if we come to a higher level retracement level. But for right now, this is what I'm going with on my forecast. So 18,104, 19,510. You might say, well, how did you get 19,510, right? That's a higher high here than 3. So when you look at this, what we completed on the S&P was harmonic expansion, right? We completed that from wave 1 back down to the origin point. We never got there. We never got there on the NASDAQ. We got up to the 3 wave and then we fell short, 19,510. That's where I'm getting that target from. So this move could be here, okay? It could be the 18,104 or come up to 19,510 for a slightly higher high. Could diverge from the S&P. It's done that in the past, but I want to be aware of it, so I put it here on my chart. Notice the timing on the NASDAQ is roughly the same. Late June, June 25th, November 18th for the high, okay? Whether it's a lower high or higher high, November 18th. This is, again, coming off of symmetry and fractals in the marketplace. Let's move forward. Let's zoom in to the NASDAQ retracement, because this is not the same as the S&P. This played out slightly different. First of all, the length, 70 bars, 99 days from your high down to your low, okay? Notice again, just like on the S&P, you had the lunar eclipse, the bottom in the market, the rally up to the lunar eclipse, total solar eclipse, the sell-off in the market, changing of the lunar cycle tomorrow, looking for a bottom to come up to wave 2. So we have 99 bars projected out here as well. So let me go ahead and move this over here, and let's look at these dates really quickly. So this would be your late June, June 28th, early July, okay, for that final low to come up for your lower high and or higher high. Right now, what we're looking for is this wave 2 move back up. That should happen around May 20th. Wave 2 over here, use the same methodology, guys, percentages and Fibonacci, so I'm not going to break the whole thing down for you. It's redundant at this point, but this is what I'm looking at. So 18,364 is what I'm looking at here for the NASDAQ on this wave 2 to move up towards May 20th. And if you look at how long this took, and I know it seems like a long time, 41 bars, 58 days for the prior retracement. And again, 41 bars, 60 days. 60 days, 60 is basically is 1/6 of a circle, okay? Remember, geometric forms, I trade heavily based off divisions of a circle, as did WD Gann. A lot of different geometric forms, right? Triangles, squares. But I look heavily at the circle and base a lot of pivot points off of divisions of the circle, as well as Fibonacci sequencing. But this is what I'm looking at. So if we can hold this base, 18,364, then coming back down for 3, coming back up to 4 at 18,100, and then coming back down for your final retracement, which I have here at the higher level target at 16,771. So let's take some measurements of this as well. We look at this, what was the total retracement for this prior retracement, your July high to October low? Coming over here, 12%, 11.97, okay? 12%. What would this total retracement be? From your high, if we come to this higher level target at 16,771, this would be 10.29%. This is a shallower retracement, but the way the fractals worked out, and you can see your M pattern here. Remember, we're always talking about M's and W's, right? Here's your M pattern in the marketplace. The way this fractal worked out, basically your wave 1 and wave 3 formed a double bottom for this bounce back up to a lower high. You did it over here, okay? I'll show you this on the fractals, but you bounced back up for your lower high and then took out wave 1 and 3 with your wave 5. And it was small. And again, this is based on the percentages lined up with Fibonacci, okay? So that's what I'm looking at. So this is a slightly shallower retracement, but you had a deep retracement in the sense that you took out all of the gains for 2024. Here's your December 28th high. You got below it, your December 28th high, and you can see that fractal. Look at that line going right through the pattern, okay? And it's the same over here. Let me show you. Take this fractal over here. There's your wave 1 low. Look at that. There's your 3. Just got a little nib below it, bounce back up, and you can see it here up to your 4. 5 came down below it. 5 came down below it. Again, percentages and Fibonacci pulls is what I'm looking at here for confluence, okay? So this is how I think this is going to play out, with the second wave being the key wave. Now, what you're probably going to ask is, couldn't we just trade long here, right? Like, if we think this is going up, why not trade to the upside? Well, there's a couple of things, and this is for everybody to decide for themselves. Let's go ahead and look at this on a day chart. Everybody should decide this for themselves. I mean, for me, it's about risk, right? So are there more risks in the market, whether you think it's yields rising, whether we're in the middle of earnings season coming up? We have some of the Mag 7 reporting this week. What if the earnings are not good? I mean, this can all come down lower, right? Fractals are not guarantees. The market's not going to break the fractal. It's just how I think it's going to play out vis-a-vis a forecast. But you could trade, but what I personally would do on a larger time frame, or perhaps the 8-hour, is look for this to form a pattern first, right? What's a good pattern to trade? Something like a Gartley pattern to the upside, which is a double bottom, a low, a higher low. Take out this fractal, trade it to the upside, you get a pullback, and then start coming back up to that 786 right here at 18,367, which is where you want to be potentially short. We'll see when we get there. Again, none of this is financial advice. This is how I view the market, guys. Do your own due diligence. But I want to see a bullish pattern form here towards the base. A classic bullish pattern would be nothing more than a higher low double bottom pattern, a W pattern here in the marketplace. Everything is M's and W's, guys, the way that I trade this marketplace. So you want to see something form. Right now on the daily, you're just sitting at your fractal high. You see that from December? You're just sitting there. So again, this took time. When you look at your pattern, no way it's going to take that long. That's how long it took before. This took time. You could just be bobbing around here for a while until you start moving up to that wave 2. It took 41 bars, 58 days, basically 2 months, 41 bars, 60 days. So we'll get some type of pattern, hopefully on a smaller time frame. We'll be talking about it on the Discord as well. If you guys are interested in that, check that out. But that's what I'm looking at here on the NASDAQ. We look at this, you came down and your MFI, you're in bearish territory, still nosediving here on the daily, momentum still bearish, holding that fractal high. It's amazing how fractals work. These are self-repeating patterns. All right, so now we are at Bitcoin. Bitcoin has been adhering beautifully for Fibonacci, as you guys know. We set these moves up long ago, guys, and you've seen it on the channel. So I want to show you again because we're going to look at where Bitcoin can retrace to and what that blow off top target could be as well. So let's go ahead and look at this because, again, tracking beautifully to Fibonacci. What are some key elements here on the chart? There's your market low, your 15.5. Here's your diamond pattern high. What we're going to do from this range right here with a fib retracement, our diamond pattern high, pull down to our market low. What did we do? You guys know this that have been watching the channel. We hit the 2 fib. Absolutely gorgeous. 48,196, 200% expansion, harmonic expansion. And what did this do? Formed a new accumulation range. From this accumulation range, we can take that fractal high back down to the diamond pattern low and take a fib and get a projection from there as well. Diamond pattern low. And then what did we do, guys? We hit the 2 fib again. Do you see a pattern? You are on a pattern trading channel. So when you see a Fibonacci fractal like this, Bitcoin's expanding 200% from accumulation range to the next accumulation range. That gives you the 2 fib at 73,765. So when we start looking at this for where this upside target could go, let's look at this. Let's shrink everything in. And I'm going to show you a key pattern. If it achieves this upside target, what's going to happen to Bitcoin? Go to that fractal high, 73,843. Pull it back down to that last accumulation range low. You get 109,148 at the 2 fib. Notice I have a green line up here for a harmonic balance point. I want to show you this on a fib retracement, how to get that line of 110,279. So we need to talk about where this could retrace to. Now, previously back in 21, as well as with market bottoms, remember, Bitcoin made its all-time high within 48 hours or 72 hours of the Russell. NASDAQ, Bitcoin, Russell all topped in November 2021. When do we have the top coming in for the NASDAQ if we complete our fractal pattern for a blow off top or even a lower high? November, right? Mid-November. So we know that for Bitcoin as well, it's going to track with the tech. It's going to track with the beta. We look at this fib retracement, guys. We're going to go to this previous accumulation low, the most recent one here, January 22nd, 2024. Pull it up to your current all-time high. You're bouncing off the 382. What 2 targets have we been talking about on this channel? Again, for weeks. The 618 at 52,000 and the deeper retracement, the 786 at 46. That's, again, this prior accumulation range. I've been calling it 45K. So down in this range. That is where I could see this going to. And if that happens, when I'm looking at my harmonic balance point, we know the FIB projection gives us 109K Bitcoin to the upside. And that's based off of this fractal wave count. When you look at this, okay, here's your first wave, second wave, diamond pattern accumulation. Third wave up to your next accumulation zone. There's your retracement. And of course, your fifth wave to your current high, right? But when we're looking at this from a harmonic balance point, I'm going to take my trend-based fib, go down to my market low, that 15.5, come all the way up to this level 5, wave 5 here, and then pull this back down to the 786, okay? The 786, that's where I think that's most likely going. Again, this is all forecasting because we don't have candles yet. So it's that 46K range. That gives you 104, okay? That gives you 104. And if we look at this and put this up at the 618, if it comes down to 52, what does that give you? 110. So now we're talking about Bitcoin, 104 to 110. That's with a harmonic bounce point. Depends where that retracement comes to. And again, that would be for a blow off top. If it just simply comes down to 52, comes down to 46, comes down to 45 in that range. If the NASDAQ makes a lower high in mid-November, if the S&P makes a lower high, then what would we be looking at? Well, down here at this 52 range, be looking at Bitcoin possibly coming back up to 65 or 70K. And if we come down to this lower accumulation range down here in the 45 range, you'd be simply looking at Bitcoin at 62, maybe 67. Again, when we have candles and see the reaction back to the upside, that's what we're going to look at. But if we focus on that upside target on Bitcoin, this makes a very key pattern I want to show you over here. So lots of people have been asking about what about the triple top, right? What's that mean? Top 1, top 2, top 3, okay? Triple top, meaning you kept failing at resistance. Here's the key though. If you come back down to either of these retracement levels, 52 or 44, and you make that blow off, notice the target up here at 110, guys. This gives you a George Lindsay pattern called 3 peaks in a domed house. He'd been trading this pattern. He passed away in the 80s, but he has multiple examples in his books of this pattern, a market ending pattern. So you have peak 1, peak 2, peak 3, and this would build your domed house. Does it have to form in this 5-wave head and shoulders formation? No, it doesn't. I did this for illustrative purposes. But again, if we look at this from Fibonacci, coming from our current all-time high, pulling back down to that low here from the prior accumulation range, there's your expansion. There's your 2 fib at 109. There's your harmonic bounce point at 110. Notice where the 1618 is. Comes back up to the 1618 after your breakout from a retracement. Comes back up to the 1618, sells off to some level, pops back up, blow off top, 110, comes back down, finds support, pops back up, 95K-ish in this scenario at the 1618. And then you have your neckline, 5-wave harmonic breakdown pattern. This is called a 3 peaks in a domed house. This is a George Lindsay pattern. You can find examples of it on the internet, but I always highly suggest actually reading the creator's books, okay? The books that have been written about him that show his patterns and illustrations as well. But this is how I would envision some degree of wave formations like this for this pattern, because this is a key market ending pattern. Now, people are going to watch this video and say, but Brendan, you didn't talk about any of the downside targets. Well, we're already forecasting based on not knowing where the retracements are going, right? So we're already forecasting that, and then we're forecasting tops. What we will do once we have some more candles, we'll look at some harder core level targets for a downside. But what I can tell you from a cycle perspective, and this is important to understand, whether you're talking about the equities or whether you're talking about Bitcoin, the markets have never put in their low prior to a recession, not once in history, which means all of the market lows will get taken out, including Bitcoin's 15.5, once we have the realization of a recession. How realistic is the recession? Everybody can have their own view. Right now, we have the longest and strongest yield curve inversion in stock market history. Longer and stronger than the GFC, okay? Longer and stronger. What's another way we could measure this? Well, okay, so we have the recession, we have the yield curve. What's another way we can measure the intensity of the sell-off that's coming? Well, from an equity perspective, guys, we've had 3 sigma bubbles, 3 standard deviations above long-term trend. How have they all resolved? Going back to 1929, the Nifty 50 in the early 70s, .com. How have they all resolved? Every single 3 sigma bubble in U.S. stock market history has fallen, talking about the S&P, a minimum of 50%. Right? A minimum of 50%. The GFC was a real estate bubble. It took down the stock market. The S&P still fell 57%, and .com it fell 50%, and the Nifty 50 in the 70s, it fell 66%. So at a minimum, you'd be looking at the market getting cut in half. The beta will perform worse to the downside. The S&P or the NASDAQ back in .com went down over 80%. So what do you think Bitcoin's going to do? I can tell you at the end of the cycle, whether or not we get our 3 peaks in a domed house coming up to 110, you're going to take out your market low and you will be below that 15.5 in Bitcoin. That number could be 10, it could be 11, could be 13. Does it have to take out the low? Nothing has to happen. Again, I'm speaking about probabilities and statistics. My opinions are based on past performances of the markets. These are measurable. You can go look at the charts. So that's what I'm basing on. Bitcoin did not exist for the Nifty 50. Obviously didn't exist in the 1920s. Didn't exist for the dot-com bubble. So nobody knows for sure. But when I look at the tracking and how it tracks to beta tech, specifically the NASDAQ and the Russell peaking and bottoming at the same time, I would imagine Bitcoin's going to suffer the same fate. But that's subjective and you guys can do your own analysis on that. But I would highly suggest watching these retracement levels because I think we're going to be breaking down here, coming down to 52 or the mid 40s, and then coming back up for our lower high or this beautiful pattern, this beautiful George Lindsay pattern, 3 peaks and a domed house. What an epic way to end the market if we did run up to 110 before a dramatic sell-off, right? So we can try to trade this all along the ways because I want to be buying down at the retracement levels, whether it's the mid 40s or the low 50s, 52, down here at 45, 46, because if we do come up for a blow-off, what a massive epic gainer in the market. Guys, hope you enjoyed this video. Please do like and subscribe. I answer your questions and comments as always. And again, give us a follow on X. Check out our Discord. I'll see you on Wednesday or Thursday for the next transmission. Take care, everybody.